It's the teller drawer. Real talk, real money, real people.
Credit unions were started by communities.
The standpoint of just being a credit union, it's kind of our job to go beyond.
Listening to the community. What are the needs?
CSE can come in and they can do financial literacy.
They're going to get that balance. They're going to get that purchase amount.
If you reach out to us, we'll help you.
The big myth is that it's always banks beat credit union.
It takes a lot of A's to get to a D, to get to a B.
Welcome back to all our viewers and listeners. I'm Lucas Tyndale here with my good friend Tim. He brought another great expert here with us again today. We're excited to be talking to you. Today we're going to be talking about something that I'm very interested in. Something in the lines of, we're going to be talking about things like predatory lending. It's something I'm a little bit aware of, but I don't think enough people know enough about it. Predatory. The movie Predator sounds like we're talking about predators today. Predator. But there is something called predatory lending. I'm excited that we have an expert who can tell us more about it. I'm not sure why the credit union has an expert on predatory lending in their establishment, but whatever. I guess they have this person to protect us. But Tim, who do you have with us here today?
Well, thanks for having us back. Today I brought James Cross, who is our consumer loan manager, and he's more an expert on all things lending, not just predatory lending.
I was worried. I was like, man, James.
No, it's all good.
All he does is read books on predatory lending.
Certainly understand where that confusion could come from based on the title of your note card here. But so the credit union, obviously, lending is what we do. It's a huge part of what we do. It's the primary source of income that we generate to keep our doors and operations open. When people come in, they get loans, they pay those back. Well, when you pay that back, you pay interest on your loan. And we've got over $230 million lent out in the community right now. So when people pay that back, that's a huge source of income for us, which, again, pays the bills for us. But with lending, there's some good apples and there's some bad apples. And it's important for us to let people know that not all loans are created equal. Do we have the best loans? I mean, yeah, we'd like to think so.
I think so.
But it's not always because, well, it's the best rate or it's the best payment. There's so much that goes into a loan, a car loan, for example. We want to make sure people understand what are you signing when you sign loan documents. If you go to a bank, what are you signing? If you go to the credit union, what are you signing? If you get a loan from a car dealer,
right? If you go to the dealer, and who are they working with? You don't always know who. They're like, we're gonna make some calls, and we got another bank, we got another lender, we're gonna do something else, and they're like fast talking you. Before you know it, they're just sliding some papers across the desk.
Absolutely. And 17 signatures later, now you got a lawsuit pending if anything happens.
My goodness.
Yes.
You're like, what happened?
Right.
Yes.
So we want to make sure people are aware of what they're signing, and there's other players that are lending money out there too. That, again, some are good and some are just in it to make money, and they don't care about you. They don't care about you as a person, as a consumer. It's how do we make money off of you and profit and line our pockets. So we're different at the credit union. Obviously, we need to write loans to people, but we're doing it because you need loans, not because we need to make money. I mean, we do need to make money, but we're looking out for you and your best interest and trying to make your life better and help you meet your goals along the way. So James is here to talk about CSE and our lending, but also more importantly, how to stay out of bad loans that aren't necessarily in your best interest. So
I love that.
Thanks for joining us, James. Hi.
Well, thank you. Thank you for bringing me in.
Absolutely. We're excited about it.
For sure.
So yeah, I guess I wanted to start this out and on the note card that we've got, I kind of want to talk about like a redemption story. So you can go out, you can get loans anywhere that you want, and that's fine. That's your prerogative. And a lot of times it comes down to education and knowing that you're getting something that's a right product for you. But CSE, we've got a knack of helping people out of bad situations. So James, what does a bad situation look like? I'm sure you could tell us story after story after story of members that we've been able to help who just can't afford what they've gotten themselves into, and we can help kind of bail you out, so to speak.
Yeah, absolutely. I think the biggest thing with predatory lending is it creates a cyclical effect to where you're constantly going back for the same loan, doing the same thing over and over, paying the same fees, but again and again. And unless you have a few infusion of cash into your budget or your finances, you're not going to be able to break that habit. And that's where kind of CSE plays the biggest part, is we can allow that infusion of cash through a loan, or it could be education and just reallocating your own funds and finances. And that will allow you to kind of break the trend. And then we also then provide the education on the back end to allow you to move forward and actually start to establish your own budget trend moving forward of paying your monthly obligations without having to go get a payday loan or something like that, to where you're paying 300% APR on it.
Yeah, and actually, let me take a step back, because you just brought up payday loans, and that's certainly something we want to talk about. And I don't know that there's many pros to payday loans outside of instant access to quick money, but then you're paying that back for a long time. In some cases, or maybe not for a long time, but you're paying way more than you should.
A lot of money for that money.
For that money.
Right.
But I think there's maybe 2 or 3 different scenarios looking back at how I asked that first question that we look at. So there's people that just get in over their heads with their financial obligations. Sometimes it's because you can't manage your money. Other times it's because bad things have happened along the way. You know, your unexpected bills come up, or your water heater goes out, your fridge goes out, and oh crap, I didn't have $1,000 to pay for that. So now I've got to go take out a loan or do something to pay for something that I need today, right now, because that's an essential part of my life. But then there's also people that don't have the money that they need to support the lifestyle that they need for whatever reason. And then you've got to rely on some sort of financing for that, or some sort of loan. So maybe we start there and talk about kind of how we can help you along the ways with any of those scenarios.
Yeah, I think that's kind of the basis of predatory lending, as you said, is it's taking advantage of consumers' desperation. I mean, ultimately, they're not you make better decisions when you have time. When you don't have time and you feel like you're against the wall, you're going to take the first person that offers you some money in that situation. Right. And what that does is you don't read your paperwork. You don't check for all the fees that you have. And it, puts you in a very bad situation from the get-go. That's part of that education piece. And I kind of consider predatory lending kind of like a modern day loan shark in a way.
That's what I was thinking. I was literally thinking
really what
that.
it is. So
yeah, with a smile.
It's
and
with a
nice
smile.
Outside.
It has a logo,
yes,
and it's cool. A brick and mortar building, not a back
legit.
alley.
They seem legit, right?
right.
right.
And that's exactly what it is. It just, it has one name. Most payday lenders, as we kind of talked about, are backed by large banks.
Are
they?
I
didn't
know that.
In those situations, they want to make money.
I did not know that.
That is true. So
what?
Yeah, it's a whole trickle down kind of umbrella effect. So.
And they're often in the poorest neighborhoods.
Correct.
It's like the poorest neighborhoods have like pawn shops, stores that sell alcohol and tobacco and products like that, and then payday loans.
In a fast cash place.
In a fast cash place, right in a row. And when you're in those neighborhoods. And whenever I'm out of town and I'm in those neighborhoods trying to get gas, CSE calls me because they don't let my card go through. And I'm always there putting my card in the thing, like, hurry up, because I'm in one of these neighborhoods in Brooklyn. And they're like, Lucas, are you really in Brooklyn? I'm like, yes, hurry up and let my card go through. But anyway, so they're protecting me. That's what they say.
Yep.
So they really do that because a predator is preying on someone. They're preying on your desperation. They're preying on your need for something right now. They're preying on the fact that you're probably not going to read all these details. They're preying on the fact that you're in a low income area, because if you're in a more affluent area, you're more likely to have more access to other resources, more options maybe. And here,
a more traditional bank or credit union, something like that. Yeah, you're definitely right on. But we have people that live in some of the better parts of town around here that go to payday loans because sometimes it's out of embarrassment, because, I don't want to go and show the credit union that I'm X amount of thousands of dollars in debt. So I'll just go to fast cash and I'll be able to pay that back really quick. But then something else happens, or something comes up, or I just didn't realize that, okay, if I took $1,000, I'm just using a round number, I have to now pay $250 in fees on that. Well, if you take the fee and you turn that into an interest rate, I mean, it's
50%.
astronomical through
Right.
the roof.
It's
so
crazy.
we have seen stuff where you calculate what an interest rate would be on this fee, the cost of having that loan, and it's 300-400%, and it's
Right.
not even uncommon at all, which is just crazy. The credit union, we are capped at 18% on the loan interest rates that we can charge for loans, credit cards, which might sound like a lot to some people, but other folks that are not very credit savvy, they might see 18% and they'll start drooling over a
Right.
percent like that because, well, I'm used to paying 50, 60, 70%. So 18,
Right.
that's all
That's
I've got. Now, you still have to qualify. And in some cases, we can't help everybody, but we can at least help you help educate people and say, listen, you're here. We got to get you from here to here. And along the way, take these steps. And then maybe next time we can do something better for you. So I know you pulled some numbers before you came. What do some of these predatory loans look like?
So just to use payday lenders as an example, the average APR, annual percentage rate for a payday loan, is 391%. So that's kind of astronomical.
Can you break that down? Annual percentage rate. What does that mean to the everyday person? What does that mean?
So essentially, it is the rate. You could think of it like a savings rate. You know, you're going to earn 2% on your account. The annual percentage rate is just breaking down how much interest you'll pay over the year, and then it kind of compounds down to a daily interest figure. So I always like to break it down into dollars because that's what everyone understands money. And if you took a $1,000 payday loan at 391% in a month, within 1 month, you're going to pay $320 in interest. So almost 33% of what you originally borrowed
alone
is what you're going to pay back. And then,
and most people don't pay that back in 1 month,
correct.
especially a dollar amount that high.
Yeah. And if you didn't have 1,000 in the first place.
So in 2 months, how much do you pay?
So it's just going to keep compounding,
Compounding.
because, you know, you probably didn't have 1,000 in the first place. So you're probably not going to have
This huge
1,300.
infusion of
Right.
cash. Right.
So now the next time you borrow 1,300, which then turns to 1,600, and then that lender may cap you out. So now you go get a second one somewhere else.
And usually the repayment window for that, it's not like you took $1,000
They're fairly
out, you
short.
got 12 months to pay
Right.
that back. Oftentimes it's 2 or 3 months, right? In most cases. So,
Right.
so yeah, you look at, okay, if I took out $1,000 and then I've got 3 months to pay it back, I don't know what a minimum payment is on those loans.
Right.
But let's just say you couldn't pay that back. To James's point, you took 1,000. Well, now you've got the extra interest charge. So the payment you made probably is maybe barely covering the interest
Right.
payment. So you still have 1,000 that you owe back.
Right.
And then you've got it's due on, you took that out
Couple
January
months.
1st.
Right.
That's due
2
March
months
31st.
from now, you still get it. Right.
So, well, what are you going to do? You're going to go back and get another one.
Wow.
So then to
The
James's
cycle
point,
continues.
The cycle continues. And it is such a cycle
Yeah.
and a dangerous cycle, and a game that people end up having to play to kind of manage their funds. And you're not even getting ahead of yourself or anywhere on that. You're not making progress on those loans.
Right. And are you guys just calling this out to call this out? Or are you telling us the CSE wants to help people out of these situations?
I think certainly both. So I think educating people on the dangers of predatory lending is ultimately our goal. But at the same time, there's a better option.
Yeah.
And it isn't always CSE. There's other banks and credit unions that exist that can help you with that. But that is something that is very, very much a part of who we are in the fabric of what makes up CSE Federal Credit Union. We've made it a point to make sure that we help those that are unbanked, people that don't have bank accounts or banking relationships, or people that might have a savings or checking account, but they don't get the same quality of services from another financial institution. We call those underserved people because they're not getting the service that they deserve.
Right.
And so it's part of who we are that goes into making decisions to help people. And again, we can't help everybody. There's people that come in that are just in really, really, really difficult financial situations. But we're not going to say, no, leave. It's a no, but listen, here's some things that you can do to help change that. And we do everything that we can with our lending and our underwriters and the policies and procedures that we've got in place to make it as courteous. I don't know what the right word is that I'm looking for, but as
user friendly.
User friendly, perfect.
Yeah.
That's a perfect word for it, and to help as many people as we can.
Right.
And we don't like saying no. I mean, I think people at times think, well, everybody's just saying no, and that's just who I am as a person or whatever.
Right.
We don't like saying no. We do everything that we can to uncover an opportunity to help you get out of a difficult situation if that's where you're at.
Yeah.
So.
I would agree with you, Tim. I think from the standpoint of just being a credit union, it's kind of our job to go beyond, earning interest, doing a loan, also helping our community in other ways by giving them the knowledge to be, to walk in somewhere when they need a loan, say it's not with CSE at that point, and not allow the wool to be pulled over their eyes, and be knowledgeable enough to say, okay, that kind of doesn't make sense on paper. Can you explain that a little bit more? Do I really need what you're trying to offer me here? And knowledge is power in the end. And the more the consumer has the ability to identify that, the more we may not even have to give them a loan in the end, which ultimately we love to do loans. But if we can get someone to the point to where they don't need a loan anymore, all the better. So
The one I'd like to, we talked about this a little bit about car loans, and I'd like to touch on this because this is a situation I think more people probably find themselves in. Those that take out payday loans or find themselves in those situations, sometimes some people do it often, some people do it every now and then, some people have done it once in a while, right? Or some people have done it once and never had to do it again maybe. But a car loan is something that most people do, or a lot of people do, at various points in life, every so many years maybe, or whatever it is. Myself, my family members, others, right? My dad was buying a car recently, and he was texting me about it, and I was texting him back, and I'm online looking up Kelley Blue Book and all this stuff and what's right, and I'm a very informed consumer when it comes to that. I'm tough when it comes to buying cars because I don't like to see people getting cheated. And I know how it is. They always say, I'm going to get you in something. And what I always think, they're going to get me in a mess. They're going to get me in debt. They're going to get me in a high interest rate. That something is something to their benefit. And yes, I might leave in a car, but that doesn't mean it may only get me back and forth to work to pay off this car. Like that may be the only fun I ever have in this car. And I've been in that situation. So I'm very careful about that. So, and I've seen I've been willing to walk away, and magically the interest rates keep going down. It's the weirdest thing. Like, no, I'm leaving. I'm not buying a car today. And they'll be calling me for the next several days. And every day the interest rate is going down. I'm like, how's that possible? It was possible that day too. And all of a sudden, all these fees that they were charging me, we'll waive this fee and that fee. You could have waived those fees when I was standing there. All of a sudden you can waive these fees. I've also been in a situation, this happened to my son recently, where every payment early on, and I know sometimes the payments early on maybe go more toward interest, but it was a situation where it was like, almost 100% of the first year or two was going toward interest. It was like so ridiculous. It was like not even close to being fair. It was like, I'm 3 years in before I ever touched the principal. Like 3 years into a 5-year loan. Like that is, I understand there may be some more interest up front, but gee, it was like way out there. So if you could help us understand that a little bit, because I think there's somebody out there who's thinking today we're talking about payday loans exclusively. There are other situations where people are getting preyed on. Can you talk to us a little bit maybe about when it comes to things like a car loan?
Yeah, absolutely. I think your situation involving fees, I think, is a big one. Normally, a lot of times there will be an application fee. We don't have an application fee. Sometimes there's a minimal application fee, but we've seen anywhere up to $100 just to apply for offering your business to someone else, which is kind of insane a little bit. And then you talked about add-on products. So, it might be free car washes for life if you paid $50. Well, the dealership I'm at is 2 hours away from my house. When am I going to come get car washes? But how many people pay the $50? And, or it could be
oil changes,
detailing,
like
everything else. Yep, oil changes. But it even goes to additional products. We offer gap insurance, which is guaranteed asset protection, which will cover the difference from insurance if you were to total your vehicle in an accident or if it was stolen and it was deemed.
You guys have that at CSE?
We do.
Okay.
And the great part is ours is $375. It's a one-time fee. But we have seen on new vehicle purchases, it's up to $1,000, up to $1,500, which is astronomically more than what we would charge. and people pay it all day because it is a good product and
It
it
is,
sounds
because
great.
you're scared. You're like, man, if my car gets totaled,
Right.
I don't want to be owing CSE still. I don't have a car. I still owe money on the loan. Then how do I get another loan? And you're looking at me like, well, Lucas, you still owe us $5,000 because they said your car was, because you drove all over the country with your car, which I did with mine. That's a mess. So I need some
and then
kind of
that
coverage.
impacts what you can get after that.
100%.
You drive off the lot and all of a sudden you're on the hook for $5,000
Yeah.
and I still need another car.
Yeah, and I'm coming to you. And I'm like, hey, CSE, I need a new car. And you guys are like, yeah, we'd love to help you. And you're like, but Lucas, you still owe us. Your insurance gave you a check for $5,000. You still owe us. You owed us $10,000. There's a $5,000 gap. Yep. That's gap coverage. It covers the gap. But if I paid $1,500 for that, that's way over what you guys would have charged me for that gap coverage.
Right, exactly. I think the other flip side of that is as well, if someone goes to the dealer and they have $20,000 down because they sold their prior vehicle, so their loan to value is only 50%, you might not even need gap insurance because you have so much equity.
Be a gap is
right,
very
it's very
unlikely.
slim. So that's the education piece that we do it a little bit different because, well, maybe you don't need to pay us $375 where everyone else might just eat that up and take your $375. So
I love that. That's good to know. These little nuggets are good to know because $375 is not a lot of money to have that kind of coverage because those are scary scenarios that I think a lot of us are concerned that we're like, man, if something happens to my car at this point, I know it's not worth what I owe on it. And you're just worried about it. Yeah.
And you brought that up with car loans. There's other things that are 100% predatory in nature that you might not think of. You mentioned pawn shops earlier. There's also buy here, pay here places or rent to own places. If you look at, I'm not going to name it.
Yeah, we know some in our head right now.
I need a
couch
refrigerator or a couch, TV,
or a
whatever.
TV.
Super Bowl,
that gets a lot of those.
Let's get
80-inch TV for some weird reason.
TV, and it should cost you, I don't know, for round number purposes, $1,000 if you go to Best Buy. But if you go to one of these buy here, or pay now, pay later, whatever, buy now, pay later, that $1,000 TV might say $1,000, but after all the fees that you pay, it's now $1,500 or $1,700 or whatever the case may be. And if you really needed that TV and you couldn't afford it, which hopefully you're prioritizing needs over wants.
Maybe a refrigerator, maybe.
But yeah, maybe a refrigerator is a better example. But if you needed that refrigerator, you could come to the credit union and get a loan for that $1,000 and maybe only pay, I don't know, $100 in interest and charges rather than $500, $700, $800 or double the amount of that refrigerator. Right. So there's a lot of other things that look good on paper, look good in the ads that come on the Tuesday mail. Yeah. But then they're not necessarily in your best interest as a consumer. So having that wherewithal and the knowledge of what is a good deal versus what's not a good deal. Sometimes a traditional loan for something, especially if it really is something that I can't go without this for more than a couple days or a couple weeks, come to the credit union, to see what your loan options could be. And oftentimes that'll save you a lot of money in the long run. So
love that.
What are some other things, James, that people can watch for signs of I'm signing a bad deal and I shouldn't sign this loan document or this dotted line that says, hey, you come and you sign this and we'll give you that. But what are some of the things? Because I know there's a list that you've got.
Yeah, I know, Lucas, you kind of alluded to a big one, which is high pressure sales.
Yes.
If you're wanting me to sign
right now
within an hour before you let me leave, before I can take a bathroom break,
right.
before I can go test drive the car that you want me to get, that's a huge indicator and probably the biggest one. And the other part is lack of details. Here, just sign this paper. We'll take care of everything else for you. That sounds great to someone that maybe has a lack of understanding of how finances work or getting a loan. Okay, you'll take care of everything for me. I trust you.
Yeah, you seem so nice.
You seem so nice.
You're so friendly.
Exactly.
You found something. You found something. You have kids. I have kids too.
Yeah.
You have a puppy. I love puppies. Right. Of course you do.
Right. And the next thing you know, you're paying 27% for your car, and because you love puppies.
Right. Something stupid. Right.
Right.
Yeah.
So that's a big one. Another one that you mentioned was making that car loan payment, and it was all going to interest. Yeah. So it's called front loading interest on the loan, and essentially what they're doing is they want to make all the income portion of the loan up front.
Yeah.
because then you get no benefit until you've paid for 18, 24 months, and they've already made their money. So if you stop paying, they take the car and they just retrieve the portion that they gave you. But they already made the...
They're good. They're like, they still win. They win.
Right.
It's a win-win for them.
Exactly.
Right.
Which is why they really don't care if you pay in the end or not, as long as you pay for a certain time period. So those are just some really easy indicators. And if it's too good to be true, it probably is.
Yeah.
So
Yeah, we
Great
talk
point.
about that a lot. Not even just with buying products or lending, but fraud and scams and all that stuff. You get that text message and, hey, here's a deal you can't refuse.
Right.
It's
I
probably- you
can't
probably
refuse.
should read
Right. I'm going to refuse.
oh man.
Right. So one of the other things we're going to talk about was something called balloon payments and loan flipping. I know about house flipping, I know about loan flipping, and I know about balloons for like birthdays and stuff. I don't know what balloon payments are. I've heard the term, but I really don't know what it is. So can you inform us? What are these things?
Yep. So balloon payments, the really attractive part of a balloon type loan is low payments, because the biggest chunk of what you're borrowing, you have to repay a big chunk at the end. So an easy example is you take out $10,000 because your basement flooded and you need to take care of that. They offer you $85 a month for your payment. Anyone's like, yeah, great. My basement just flooded. $85 a month sounds great. But what they don't tell you is that $85 basically covers interest during the loan. And then after 36 months, you still owe $10,000. Wow. So you paid $85 a month just to cover the interest, and now you still owe $10,000 at the end. So the trick with that is now you either have to get a new loan to pay off that $10,000, or you just magically have $10,000 in your bank account, which I don't know about you, but most of us don't just have a magical $10,000 that popped up. So
wow.
So that's kind of the crazy part with that, where over, say, that $10,000 example, you would pay about $2,900 in interest for 36 months. If you would have did a traditional loan for $10,000, you would have paid about $1,600 in interest and not owed a payment at the end.
Right.
Now you would have had a slightly higher monthly payment, but you're going to save a lot of money in the end.
Right.
So
fascinating.
yeah. And that then creates the cyclical effect because, you can't make the payment at the end. So then you go get another loan.
Thinking,
and
okay, there's a 3-year loan. I'll be paid off in 3 years. And now, oh, shoot.
So you get to the end of 3 years and they're like, sorry, does it,
You still
at the
owe
end of
us
3 years, do they say you owe bigger monthly payments, or they literally are just like, where's my 10,000?
just where's my 10,000? Now, the great part is they might offer you a great deal of, say, we'll give you a new loan of 10,000 at 25%, and
your
you
payment
can
is
make
now
monthly payments, and because we want to
$200 a
keep the
month.
payment the same, we'll take it out 120 months, and you'll pay us for the next 10 years, so you can still afford the payment. So it elongates how long
And they're
you're
making
paying
money
on that
forever.
money.
What do they care? 'Cause
Right.
They got thousands of these out there, so their monthly income is wild.
Right.
And when you talk about the money you guys have lent out right now, 40 million, something.
Oh, yeah, a couple $100 million.
Couple $100 million. I'm
250
way
million
under.
right now.
All right, a couple $100 million. They may have that same situation, but they're doing it in a predatory way.
Exactly.
Wow.
Yeah. So, in another good example, it's not necessarily considered balloon payment, but 0% financing on, say, a credit card. You go in a store, they offer you 0% on your $45 purchase, but then you use it, let's say 2,000. The trick with that is a lot of times the dates don't align. So unless you pay off the entire balance by, let's say, November, but your payment's due in December. So they purposely will put the date beforehand so you don't pay it in full, and then all of that interest backdates and comes up and hits your account.
I didn't know they do that.
Yeah.
A lot of that is stuff people don't know. They'll think, okay, well, it's 0% for 12 months.
I have 12 months.
I'll pay
I'm
everything
good.
I can, and then whatever's left over, I'll just pay.
Yeah,
and
before that
even
12
if it's
months.
subject to interest. But if you don't pay it off within that period,
All that interest
most
comes
of the
in.
time, all of it gets backdated. So if you saved $5,000 in interest, well, now you're on the hook for that interest. So, and I do want to make sure people know we run promotions like that on our credit card portfolio every now and then. Anytime we do a 0% offer, we only charge you interest on whatever is left over
That's
at
great.
the end of that period. We never backdate. We're not adding that to the end of the term.
Right.
So if you ever see a 0% promotion from the credit union, just know
From CSE.
From CSE.
Right.
From us specifically.
Right.
We're never going to backdate that interest and say, oh, sorry, you didn't pay it off in 12 months. You owe us all this extra money.
Gotcha.
So I do want to make sure that gets pointed out, because there are times when we'll do stuff that might look like what we're saying not to do, but we don't go with the predatory stuff at the end on the backside.
Makes sense.
So
Yeah, and then the second part, as far as loan flipping, the tricky part with that is to extend the life of how long you're borrowing from that lender, and that's essentially what they're trying to do. So you need $2,000 to fix your car. Great, you're paying on it fine. 6 months from now, okay, you've paid your loan down $500. Do you need another $2,000? And a lot of people, you're offered free money, whether you need it or not.
Right. Like,
that doesn't sound too bad.
Right.
I could do some things around the house.
Right.
Next thing you know, another 6 months passes. It adds and adds and adds, and your $2,000 now has become $14,000.
Wow.
And you've continued to escalate your payment, and now you're further in debt. And now, when something does happen, you don't have the same lifeline that maybe you could have before. So, and the worst part with that is not only the interest aspect, but they also charge that application fee each time, insurance fees, all of those add-on
It's like
products.
refinancing your house every 6 months
Exactly.
or something almost.
So exactly,
Wow.
but people don't think of it like that
Right.
because, why would you? Because it's all in the fine print, and you still get money in the end.
And it's hard to think, I don't want to say it's hard to think straight, but it's hard to be rational in your thoughts sometimes if you're in a difficult financial situation. Like, yeah, I could use that, and then this is it. This is the last time. And then
the last time was supposed to be the last time.
Right, last time. Or rates, the market goes haywire. Something happens, and crap, now I can't get out of this $2,000 debt, or whatever the debt dollar amount is that you're in. And it just always is snowballing and making a bad situation worse.
Yeah.
So
fascinating.
Yeah.
So all that said, what are some things that CSE can do to help? Again, we haven't been able to help everybody, but we do what we can. So what are some things that you see daily in your job?
Yeah, I think the biggest thing is we listen to stories. Each of our member has a different story. We all have different life events. We've all gotten to this point in our lives through different experiences. Listening to that, finding out what's going on, where someone is going with their life from a budget standpoint or just in general, and then taking that information and being able to help people. We have people that have really small holes that they've dug, and then really, really deep holes. And sometimes you need a really big ladder or a multitude of ladders to get them out of that hole, but we'll be kind of there with them to get them through that. And we'll do everything from a full consolidation to kind of get them cleaned up all from the start, or we might do a stair-step approach. Here's phase 1, phase 2, phase 3,
and kind of build that roadmap.
And kind of build that roadmap with them. Yeah. And I think that's critical, because unless you have their buy-in and they're in tune to kind of the roadmap to success, ultimately they might falter along the way a lot more likely unless you sit down, work it out with them, because they need to be part of the plan. It's essentially their life.
Right.
So, and they have to be part of that.
And a lot of times it comes back to things that we've talked about on almost every episode is that relationship.
Absolutely.
So as we better understand our members, and as our members better understand how we can help them, we talk about snowballing, that snowballs. And so then it's, hey, listen, I'm in a real tight spot. Well, listen, maybe we shouldn't do this, but we know that you're good for it. We know that you're going to come back to the credit union and not go bad on this loan. So we're going to take a chance on you where other people might not, or had we not built that relationship with you, we might not have.
Right.
So yeah, the relationship is such a big deal, and you got to start somewhere, but we've helped a lot of people through the years get out of really deep holes because of that relationship, and being able to stair step with them or create custom solutions for them, because that's what we do.
I love
help
that.
people. So
yeah, I think the relationship piece is huge, because even though you do create that roadmap, you're going to have detours. You're going to have things that come up, and allowing the member to have that confidence and that safe space to actually come and say, hey, I know you told me not to do this, but XYZ happened and I'm kind of in a pinch. What can I do? Can you help me out? And we've had people come back 1 month after getting a loan to get them out of a situation. They're right back in there. And, you know, sometimes, you know, we also have to check ourselves at times and not be judgmental and, you know, really listen to the story and say, okay, it's only been a month, but we're going to help you out and, you know, keep you on the straight and narrow. So.
But one of our loan consultants that we've worked with for years has ingrained this mantra in our heads that bad things happen to good people.
Yeah.
And it's our role to help pick them up when we can and when they're down. And as we've done that, that just solidifies the relationship again, not to keep coming back to that word. And we're just here to help people. We're people too.
Yeah.
You know, we have people at the credit union that have been in difficult situations. So we've been able to help them out too. But it's that empathy and understanding that we're all people trying to make this all work together. And that's what we do every day.
I love it. It reminds me something I always think about is building bridges before you need them and learning to swim before you're drowning. I always think people wait until they need something and then they come and say run to a CSE when they've never had a relationship. And not that you guys would turn someone away and say, for 100%, you've never had a relationship with us and you can't get a loan here, but that it is a lot easier when they have built a relationship, they've established some accounts, you have some relationship. And I think a lot of people take that for granted. And even people I've talked to who know I now have a great relationship with you guys, they're often asking me, how do you get in with CSE? How do you get CSE to sponsor stuff? How do you get, and then my first question to them is always, are you a member there? Not that it's a requirement, but to me, it's like the reason they can do the things they do in our community, and you guys do a lot of wonderful things, you sponsor and support a lot of wonderful things, is because our dollars are flowing through there and you're able to put those dollars to work to make it happen. So if we're not putting our dollars in there and taking loans and things, my car loan is there, other things, you guys can't do those things. So I'm like, if you're not supporting the thing you want to support you, if you're not building the bridge and making this a two-way street, it's kind of silly to be asking and you're doing over here banking with everybody else, but they're not going to help you. I'm like, I don't understand it. So I love how you guys continue to talk about the relationship, because oftentimes we find ourselves being preyed upon and we need a family bank, a credit union that treats their members like family. And that's been something we've been hearing over and over, Tim, and it matters. So thank you guys for this information today. Super helpful. This is a topic that I love because I grew up in those communities with not a lot of options, and I saw a lot of people get taken advantage of. I've been taken advantage of before with just lending, especially like I said, buying cars and things. And I wish I had known. And I learned about CSE because a relative of mine got a bad deal with a car, and CSE helped her out in ways that I just had never heard of. And I was like, I need to bank with them because I couldn't even believe she was saying it. I had to keep asking her, like, are you sure that happened? Like, no way. They didn't do that. Nobody does that, because I do business and I know how cold business is. Business is business. People don't really care. They act like they care. They don't care. And she's like, no, they really care. And I've been with CSE ever since. So thank you guys for caring so much.
Thank you.
Tim, thank you for bringing another great friend.
Yeah, I'll keep them coming.
Yeah, keep the experts coming. This has been a wonderful, wonderful time. Thank you so much.
Thank you, Lucas.
Thanks for bringing your expertise, ladies and gentlemen. Keep listening, keep watching, keep checking us out. We hope to continue to enlighten you with this great information. We'll see you guys next time.
Thank you.
Thanks. Take care.